You're raising your price target when a number of analysts on the street slashed their price targets because they were worried about margin pressure. What are they missing?
Mostly long-term thinking. Let's dive into this video.
Well, I think the concerns over margin pressure are very short-term oriented. We've heard Tesla say this, but we've actually modeled the opportunity in robotaxis, in autonomy. And if you look at the future of, Tesla vehicles that are capable, becoming robotaxi enabled, earning a recurring revenue stream at what we think will be software as a service like margins. This is an amazing potential for Tesla. It'll definitely be, the highest return on investment per battery produced, as we've analyzed in our new report up on our website. So I think that, again, this will totally change Tesla's margin structure in the future. They mentioned on the earnings call that they're prioritizing getting cars out on the road. I think that's a smart decision, as opposed to, keeping margins high and prices high in the short term. They just want to get as many cars out on the road as possible. Those cars feed Tesla's data engine, and that's what turns each of them into a fully autonomous car in the future.
Many investors criticize ARK Invest heavily because they think ARK Invest puts too much value on Tesla solving full self-driving. So Brett Vinton from ARK Invest said this: you can never satisfy the cynics. What if they are scaling constrained, face ongoing competitive pricing pressure, and can deliver robotaxi or ride hail, all in the same feature Tesla universe? Well, Brett says that the model still shows that Tesla stock would be at $370 per share. That's for 2027, and that $2,000 price target, of course, is also for 2027. And to some, $370 per share may not sound like a lot, but that is still a lot more than a doubling from here. And remember, that assumes that Tesla would be scaling constrained, it would face ongoing competitive pricing pressure, and it wouldn't be able to deliver on the robotaxi network. Bigger scale and full self-driving, these are two big reasons to own Tesla stock, and we just eliminated basically the two biggest reasons. Even in this bad case scenario, Tesla stock would still double, which would very, very roughly be a 20% return per year. If my returns exceed the returns of S&P 500, I am very happy overall. So I regularly keep buying more and more and more and more.
Yeah, Elon said on the earnings call he thinks they could achieve fully autonomous this year. Is that your expectation?
So we have a Monte Carlo model with a range of assumptions. The midpoint of our expectation is in 2024. So it'd be later than Elon says. In our most bullish case, I think they could launch fourth quarter this year. But again, the real thing to look at here is, whether or not it's fourth quarter, whether or not it's next year or the year after that, this is an amazing opportunity. We think the market for robotaxis globally could be worth, $9 to $10 trillion in the next decade. So it's clear why Tesla is pursuing this opportunity. And again, with their data advantage and their verticalization, they really could be a leader here.
While it is certainly fun to try to predict exactly when Tesla will solve full self-driving, I think there is a more effective approach for looking at Tesla stock. I'm specifically talking about this current valuation, because there's so much upside still from Tesla's EV business, Tesla's energy business, other side businesses such as Dojo, that even if full self-driving is not solved in the near future, Tesla stock, I believe, is going to do very well. But in the long term, what really matters is who is going to be the first one to solve autonomy. And I believe because Tesla has so much data, much more data than everyone else, it is going to be Tesla. And Tesla just now published this report that shows how many accidents people experience then they turn on FSD. Typically, a US vehicle will experience 1.53 accidents per 1 million miles driven, but people that have autopilot enabled will only experience 0.18 accidents, but it's mostly highway miles, and we have less accidents on highways, although when they do happen, they are deadly. A lot of people die on highways, although most of the accidents do not happen on highways. So this is a very good statistic. But then FSD, which is mostly non-highway miles, only has 0.31 accidents per million miles driven. And even then, Teslas do not have any safety features on, which maybe you could say this number is much better to compare to instead of this, because you have a lot of old vehicles here. Maybe they don't have great brakes, for example, or they can't accelerate quickly out of a bad situation, which all Teslas have good brakes. These are new vehicles and they can accelerate very fast, certainly. So maybe it's more fair to compare these numbers to this number, and clearly it is going well. Some of this, of course, is going to be slightly skewed with higher safety scores, but with everyone being able to have access to full self-driving beta now, despite your safety score, this data is becoming less and less and less skewed with every month that passes by. I believe we are on the verge of something truly big here, although this may take some time still. Maybe not this year, and maybe not even next year, but I believe Tesla is going to be the first company to solve full self-driving, specifically only using vision.
So Tasha, that's a little bit down the line. When we talk about maybe the next year or two with Tesla, of course, when they continuously cut the prices of vehicles, a lot of people are asking if there's a demand issue. Are you seeing any sign of that?
So, again, the story here, if you take a step back, is really that EVs are gaining share. So Tesla was harping on this on their earnings call recently, that you should think of them as a share of the total global auto market as opposed to just the EV sector. Because again, in the future, it's going to be electric vehicles. So, my partner analyst, Sam Kors, has done a lot of great work looking at the electric vehicle market. We think that there'll be 60 million units sold in the next 5 years annually. And, that's up from, single digit percentage points as a percentage of auto sales today. So I think that Tesla here is really in the lead. They have a multi-year advantage over competitors. It's, again, that verticalization strategy that keeps them in the lead. So we think on an efficiency basis per cost for the price that you're paying for the car, they're still way ahead of the competition. And, I'd be pretty scared if I were a traditional automaker right now and I saw Tesla cutting prices, I'll tell you that, because not all of these platforms are profitable at other automakers yet.
I know a lot of Tesla stock investors do not like looking at Tesla's BEV share, but I think it is important to look at it. I think, of course, the overall car market share is very important, but the BEV market share also gives us an idea how competitive Tesla currently is against other BEVs. I mean, Tesla is not going to be able to just compete against gasoline-powered vehicles forever. These are going to go away, every single one of them almost, and then Tesla will just be left competing with other battery electric vehicles. Now, on the other hand, the BEV number can also be a little bit misleading, especially in China, because a lot of vehicles there are very cheap vehicles. If you make $10,000 in profit from just one vehicle sold, but your competitor has to sell 5 vehicles to make that same amount of money, which one is better? The profits are the same, but the market share numbers are going to look very differently. So BYD, watch out when Tesla makes that cheap vehicle. In the US, I think the number is actually pretty good at indicating how competitive Tesla is, because most of the vehicles over here that are electric are more expensive, unlike in China. These numbers are from Q4, by the way. In Q1, Tesla's BEV market share increased significantly in China as well as in Europe. In Europe, it's actually over 20% now. And what's even more impressive is that the battery electric vehicle market share overall of all vehicles actually went down for the whole industry in Europe, but Tesla's actually increased, which shows clearly that the price cuts are working. And that's one reason for slightly slower growth. I mean, if the whole industry is slowing down, of course, Tesla would slow down, except it still grew quarter over quarter.
Yeah, they have some very slim margins, do those traditional automakers. So there are the margin concerns. There's also this group of shareholders that own a combined 1.5 billion in shares. They're concerned about something else, and that is a distracted CEO, of course, Elon Musk. They write in this letter to the board, "We have grown increasingly concerned with governance and leadership issues at the company. Tesla needs a board that will ensure that the CEO is focused on addressing its challenges." Are you concerned about Elon Musk being distracted with Twitter, SpaceX, and everything else he takes on?
The person leading that campaign is a New York City politician who has been called as one of the most left-leaning politicians in the city. Clearly, to some extent, that campaign is politically motivated against Elon Musk. Watch the last video if you haven't. I dive deeper into that.
It's not a surprise to us to see him tackling many issues at once. As you mentioned, SpaceX, he was one of the founders of OpenAI. We've seen him spread out his responsibilities among his companies. And really, what do we have to go off of? It's his execution. Look at Tesla's progress today from 5 years ago. Again, it's the leading company in electric vehicles. We also think so in autonomy. And I think he's a really crucial figure to actually crossing that finish line to creating a fully autonomous car. So we have full confidence in him as the leader of Tesla. And in fact, we'd be more worried if he were stepping away from his responsibilities. I think that while yes, it's shocking that he's able to manage this many companies at once, this isn't something that we haven't seen him do before.
Elon Musk in this latest interview has reiterated that Twitter is so close to being profitable, and naturally once Twitter becomes profitable, he will be a lot more likely to find a Twitter CEO, and then he can just step back and control everything from the background instead of running the whole thing day to day.
You're happy if he stays on board as CEO of Twitter beyond this year?
Yeah, so we are invested in Twitter in our private fund here at ARK. So I think that a lot of the ideas that he's put forward there to have the potential to really change the company and particularly the payments platform aspect of things we're pretty excited about. And our fintech team has done a lot of research there. But again, I think going back to Tesla, I'm not concerned with him splitting his time. We're going off of his execution here, and he's been an amazing leader. He's built an auto company that's really unrivaled in its autonomy and AI advantage, its software advantage, and its battery advantage.
If you have been following Elon Musk for a decade or more, you understand this is just business as usual.
Tasha, what about the Cybertruck? Certainly that has drummed up some excitement. Of course, it was mentioned a couple of times on the most recent earnings call. How important, or is it important at all, to the investment thesis?
What I think is so interesting about Cybertruck is it's just another way that Tesla is really efficiently producing cars. The no need for paint or any coating, one single piece over the body of the car. It's a lot cheaper to make than, say, the Model 3. Or at least the frame of it is. So we think that, the next generation vehicle that Tesla announced, which is going to be half the cost of the Model 3 and Y platform, that could potentially be a vehicle that looks similar to the design of the Cybertruck. And again, they do that because it's the most cost efficient way to produce these vehicles. And if you have a robo-taxi fleet, that's bringing down costs, we think that an EV already makes a ton of sense for autonomy on a cost per mile basis. And this is just going to, push Tesla even further over that edge of making an extremely efficient platform that'll lower the cost of transportation for people globally.
Personally, I am very excited about the Cybertruck, but I know there are some investors that are concerned and think that the Cybertruck is not going to be a big hit. And these investors often short Tesla stock or are not invested in Tesla stock. But even in the worst case scenario, let's assume the Cybertruck somehow does not become a big hit. Tesla can just make a regular truck. It's not a big problem. But if this design works, which I think it will, this is going to be a big hit. So the risk is worth taking. And this is an important message to all Tesla stock investors. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.